All right, for more on the World Bank's global economic outlook, let's bring in Ayhan Kose. He is the director of the World Bank's Development Prospects Group. Ayhan, thanks for joining us tonight.
Thank you for inviting me.
Not such a good report. The World Bank slashing its growth forecast over the next 3 years. And the biggest factor here, the slump in commodity prices. So if this persists,
yes,
lower oil prices, lower metal prices, what does it mean for those countries like Nigeria and Venezuela and Russia? What can be done?
Now, we need to understand the underlying reason for the low commodity prices. There is ample supply around the world. Of course, when the commodity prices were going up, these economies put a lot of investment into generating additional supply. Now, we need to see that supply is going to basically go down, and there is going to be a market equilibrium. In other words, demand-supply dynamics are going to settle down, and then prices are going to, in a sense...
So is it only a matter of time?
It's a matter of time, but at the same time, we need to understand prices are not going to go back to the levels we have seen prior to the crisis. We will see some stability, but not the, the oil price we have seen around $100. I think those times are gone.
So where is the new forecast for oil then?
This year, we are expecting oil to be around $41 for the entire year. Next year, to be around $50.
All right, well, you would think that the countries that are importing commodities are benefiting from these lower oil prices and lower metal prices, but that doesn't really seem to be the case. That hasn't really materialized as such. Why is that?
I think that we need to understand there is some benefit associated with low oil prices. We see vulnerabilities in terms of current account deficits, in terms of inflation, went down in a number of countries. At the same time, overall, when we look at the commodity importing economies, we see that these economies have been quite resilient. Now, it will take time to see the benefits of these low prices as basically firms, households around the world, they are trying to reduce their debt levels, so they are very cautious when they undertake additional consumption, when they undertake additional investment. So it will take some time, but we still think that there's an upside risk, and that risk is this benefits of low prices materializing.
So in terms of the commodity, just waiting for time to sort out the demand-supply equilibrium. One thing in the World Bank report that stood out to me, I found this particularly interesting, is the warning that with these interest rates being so low and the increase in private sector credit, there is a potentially dangerous buildup in corporate debt.
Yes.
Is a corporate bond bubble forming here?
I don't think that we can call it a bubble. But when you look at the levels we have seen in the past, obviously, recent buildup is comparable with the earlier booms of credit and corporate debt. Now, the question is that how this is going to be resolved. We see that if the current dynamics continue during the next 18 to 24 months, and governments do not pay attention to financial stability issues, this will become a major challenge down the road.
Are these bonds in a position that you think they'll be able to be repaid? Are the factors surrounding the economy suggesting that there will be a lot of default?
That's an excellent question. At the end of the day, we see especially commodity exporting economies accumulating significant amount of debt. And if commodity prices stay depressed, we think that there will be a little bit of recovery, as I mentioned. Of course, those countries will have a more difficult time.
A big topic is the Brexit, and the World Bank cites that as one of the top risks. What happens if they vote to leave the EU? How is that going to impact things?
I think the accounting is very clear. On the one side, you have British economy, quite sizable, and on the other side, you have European Union, very sizable bloc, and they have strong trade and financial linkages. If British people decide to leave the European Union, this has material implications for global financial markets, and I am afraid those implications are quite ugly.
We'll find out in 2 weeks' time. If they vote to stay in the EU, problem solved, problem over?
I think that one of the important risks is going to be behind us, and let's hope that that's the outcome. But ultimately, this is up to British people to make.
Well, how does the U.S. presidential election and the uncertainty that surrounds that impact the global economy in terms of growth right now?
I think the presidential elections are down the road. There will be uncertainty associated with those elections as well. What we are paying attention, the increase in protectionist tendencies around the world and implications of those tendencies for already weak global capital and financial flows. And if this weakness continues, of course, it's not good news for the global economy.
The Fed is under a lot of pressure. They've been cited as potentially causing a jump in borrowing costs that we're not prepared for, despite all the rhetoric, if they tighten rates. What does this mean for the Fed then?
I think that the Federal Reserve policymakers have done an excellent job so far in terms of starting the tightening cycle and then signaling markets about their next move. Our report makes a very clear case. Global economy is quite weak, and they have been listening, and we are hoping that they will continue doing so. They are going to basically give clear signals about their next move, prepare the markets, and then undertake the, the next interest rate hike.
So very quickly, when do you think that would be?
I think if incoming data supports an increase in wages, an increase in inflation, and supports activity, we will see a rate hike sooner or later. So the question is not, this month or the next month. It will happen. Emerging and developing economies have to get ready. So they need to get ready for the, the worst outcome, but hope for the best outcome.
All right. We're going to have to leave it there. Thank you so much. Ayhan Kose, Director of the World Bank Group's Development Prospects Group.
If you like what you just saw, follow us on social media and visit our website, CCTV-America.com.